I recently had a video related to the updates the Treasury made regarding the 2025 estate tax exemptions. But the thing that I didn't talk about there is the updates the Treasury made to the 2025 gift tax exemptions. So today I want to talk about that and just how the estate and gift tax work together. So let's get into it. All right, so first let's talk about how the estate tax and the gift tax work together, and then we'll get into the updates to the actual laws. So the Treasury says that you have a certain amount of assets, the value, which is today it's $13.61 million in assets, that you can pass free of any estate tax. Now, it's actually a lifetime transfer. It's not just upon your death that they look at this transfer of wealth. And in 2025, they recently released that you can pass up to 13.99 free of any estate tax. Now, those laws could change in 2026 because of the 2017 Tax Cuts and Jobs Act legislation that was passed. I'm not going to talk about that. I do have a video about that, so check that out if you're interested in that. So you're allowed to transfer all of these assets during your lifetime, and the Treasury keeps up with it. So this is where the gift tax becomes important, because the way that the IRS, I should say, keeps up with this is that they make you report any gifts that you make over a certain amount. And if you make gifts over that certain amount, then that is going to eat into your lifetime estate tax exemption, okay? So estate tax, gift tax. Gift tax eats into your estate tax exemption, okay? So today, as I said, you can pass $13.61 million in assets. Next year, it'll be $13.99 million in assets during your entire life. As it stands today, if you make a gift under $18,000, you don't have to report that, and therefore it won't be eating into your lifetime estate tax exemption. Next year, they're changing it from $18,000 to $19,000 per gift. So you can make multiple gifts to multiple people, to multiple trusts. And as long as it's under $19,000, you don't have to report that to the IRS. If it is over $19,000, then you have to report not just the amount that's over $19,000, but the entire amount of that gift to the IRS. And the IRS is then going to deduct that amount from your total lifetime exemption amount, okay? So the gift tax eats into the federal estate tax. So a lot of times people think that a gift automatically counts against them, or maybe that there's even an income tax liability due related to receiving a gift. There's no income related to receiving a gift, and only if it's over the exemption amount does it even get reported to the IRS. So even though it's reported to the IRS, it doesn't mean that there is some type of tax due. It's just a reporting requirement, and that estate tax doesn't actually get assessed until you pass away. So think about that. Think about the fact that there's these exemption amounts, and they're both going up each year. Federal estate tax is going up to $13.99 million per person in 2025. The gift tax is going up to $19,000 per gift that you make.